Hi guys, and welcome to today's Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to go over Kiwi Swiss. Obviously we took a trade on this a few days ago, or in just the sort of end of last week, so I just wanted to kind of cover what was going on in this market and why I'm looking for further downside. Obviously we've been very heavy on the side of Kiwi weakness this week, and that's what we should be focusing on, and that's not going to change for me because that's where I feel it's best placed for our opportunities, our trading opportunities at the moment. It's the whole reason why I use currency strength and weakness, is to narrow down on a currency and then try and find the best currencies to trade it against. So I know I want to be short Kiwi, it's just which currencies am I going to do that against. Obviously we're already short Kiwi Swiss, which is fantastic. We've looked at other opportunities on Euro Kiwi, for instance, Kiwi dollar, and things like that, but Kiwi Swiss is the only really one that's taken off for us. So Kiwi Swiss is moving nicely to the downside. Is there going to be some add-in positions? That's what I'm going to be looking for today. So this is our current position. I've just mapped it out here on TradingView just to make it a little bit easier for us. So the next step for me, again, is we've got those daily close nicely heading towards our area of targets. So what I want to do now is, could I add any positions? And what I like to do is check out that 4-hour trend. The 4-hour trend to me is a really important trend to watch because it's a really nice mid-term trend. It's really easy to follow, and it's always got really good support and resistance levels that tend to hold quite often. So I really enjoy trading or at least analysing on this time frame, especially with the trend, because I know that my trading strategies are better in trending environments. So that's my job. My job is essentially find a trend. The strategy and everything else does the rest for me. I don't have to think about the strategy anymore. It's just literally focus on where that trend is, and then the strategy should perform. So we're looking at this position here. So like instance, I could have added a position in here because the market had broken through and formed a new lower low. So that's a start that the trend could be forming here. It's pulled back into this area of resistance, and I guarantee there's going to be a 15-minute change in cycle here, which is how I would typically look to enter the markets. Now the price is pushing to the downside. We've got this nice little shelf just through here around about 0.61, which I quite like the look of as well. So now the market has broken down, what I'm going to do next is draw a rectangle on and say to myself, you know, it could even span all the way up here, doesn't really matter. All I want to see is the market retest that zone. If the market can rally up into that point here, I'll be looking on the 15-minute time frame to see if there's any changes in cycle. So is there a double top pattern? Is there a head and shoulders pattern? Is there anything to suggest that the 15-minute is going to start lining up with the 4-hour time frame? And if there is, then I'm going to be looking for that short. So let's just show you what happened actually when price came up into sort of these lows just up here. So if we go into that 15-minute time frame, just zoom right in. Let's actually get rid of this for now, we don't need that. What happened at this point? Did the market change cycle? So what I look for is typically changes in trend. So you can see here we have like the market form a bit of a double top pattern. It doesn't really break through that low at that point. The only time it does is here, which may be a little bit too late to enter a trade at that point. But if you did enter a trade and put your stop loss a nice 10 pips or ATR above this stop loss is what I like to do, or look at least the size of the spread. If the spread is good enough, you can look to just add spread on top. I like to add a few more pips, so you can see 20. I like to at least add 10 onto my stop loss, just because you want to account for that spread. You want to account for any kind of swings in the market, and then I'll target a 2-to-1 risk reward ratio. So in this case, it'd be a 60 pip target, which comes in nicely just down through here. But the point is, you've got the things lining up. You've got the daily closes finishing bearish. You've got the 4-hour time frame trending to the downside. It pulls back. Then the 15-minute changes cycle with that candlestick in there, and then the market obviously falls to the downside. You could obviously wait for that break in here as well, which would be the most ideal, but you know, the markets aren't perfect. They're not going to do what you want it to do immediately. Half the time it will try and, you know, push highs again before going down. That's why I like to have a little bit of a buffer above the highs, and again the markets come to the downside. So I'll be looking for the exact same thing here. If the market starts moving back in the 4-hour time frame, so the 4-hour starts creating some bullish candlesticks, I'm really looking for price to come back into this level. Then I'm going to dive onto our 15-minute time frame and then look for that change in cycle to agree with our position, and then look to trade short once again. Okay, so that's how I like to look at the market. I like the 15 minutes to agree with my 4-hour time frame and my daily time frame. So now that the 4-hour is creating these nice lower lows just through there, I want to be looking to continue to sell the market in line with that trend. Obviously, if this just suddenly out of nowhere rallies and maybe takes this high out, this is kind of the previous high at the moment, and closes above that, then everything's changed. The 4-hour trend is not intact anymore, so I have to just leave this one alone. As long as the 4-hour trend remains intact, I'm happy to continue to look for those positions. Okay, so thanks for watching this video update. I hope you enjoyed it. Keep an eye on trends. Trends are where you make the money. Thanks for watching. See you in the next video.